Hello everyone, this is Paul from the Pin Academy, and in this video I'm going to be learning how to do top-down analysis. Remember, we're on a series whereby I'm going to be showing how to implement exactly what we have been teaching you on this channel, implementing whatever we have been speaking about on the live market, on a practical market and current price that is moving, right? Not the one whereby I've been showing examples of what has already happened, replaying and all that. We're going to be actually breaking down a market, and it is up to you to compare it with the analysis so that you can see if actually the things we're teaching you are working or not, right? So without wasting time, let's get into it. Now we're going to do a top-down analysis or multi-time frame analysis on Volatility 75. Volatility 75 is a synthetic index, and you can find it on a broker called Deriv. So if you don't have an account, get a demo account and you start practicing. They're very, very volatile. So make sure you use proper risk management in case you're going on a live account. If you don't have an account there, get it. I'll put a link in the description. Make sure you use it. Now, let's start from monthly. When you start from monthly, I've spoken about this even in the previous videos. I'm just going to attach it about this. Now, in monthly, we have a market that was making lower low, lower high, lower low, lower high, lower low, lower high. Now, we have tested this point here, and I spoke in that video that we need the market. There's no momentum here. We needed the market first give us a push down. I spoke about it when it was still there. I wanted the market to give us a push down, either to create double, this actually like a triple bottom here, or even to make a lower low. Now, the market has made a triple bottom. It's reacting, right? So we're going to observe how the month is going to end. We still have very many days to the end of the month, but so they're reacting to this, right? We shall see more in the next lower time frames, right? So what can we see here right now is that the market is a bit trapped between this and here. So it can either break downwards or it can break upwards. This is what the market is showing us, because this bottom here has rejected price of more than once. Also, this top has rejected price more than once. So it's trapped in between here. The market is ranging. Now, when I come down to weekly, what do I observe? In weekly, I did have an M here, which I spoke about. We wanted a retest here. It retested and we came back down. Now, this double bottom here has held price. But there are higher chances of the market coming a little bit down to retest before either going upwards or even breaking downwards. We don't know which one it's going to do. Like you can see even here, the market is still trapped. The market was rejected here. It has come back, it has rejected, it's back up here. So we can either break upwards or downwards, meaning weekly and monthly are speaking the same thing, right? But the more you go to smaller time frames, when you realize a better structure that can give you the communication that the market is trying to tell you, right? Now, when you go down to daily, what do we observe in daily? Now, in daily, if you observe the market is making lower lows, lower highs, lower lows, lower highs, actually equal lows here, lower low, lower high, then double bottoms, then came back up, right? Made a lower high here, equal highs with this one here, didn't break it, meaning the market was still bearish. Then we came and have created a higher low. Why did we create a higher low? Because of this neckline here. You guys know what what we are interested in W. When the market goes up and comes back to the neckline, of course, it was tested here. This neckline was tested here, but again, it held price here. Now, this is what we do expect on V75 according to what we teach you. We do have untested areas here, which I expect the market to react to here. But again, we do have a W down here. So I expect the market, if it is to move upwards here, to give us a retracement here. Depending on the structure formed here, it will either give us a lower high, then continue down, or if there's no structure created here, the market is most likely to continue up. And the moment we break this high here, we're just going to retest and then we continue up. Recall, we're saying monthly and weekly are in a channel. Remember, when the market is ranging, it can either break upwards or it can break downwards. So whatever happens in daily is going to determine. Let me just repeat that. The market is currently ranging, but we have untested levels into this area here. So depending on how the market behaves here, we expect the market to give us a retracement to retest this point here. So when that happens, and there's a structure here, the market is most likely going to give us a retracement to test that structure, and then we can drop down. Are we together? But if there's no structure when the market is coming to retest, there are higher chances the market will retest after here, then it will go upwards. Let me just change the color of this arrow here so that you can tell the difference. Just put it like this. So what is going to determine all these movements is the structure that will be created here. Are we together? So if there's a structure, it's going to come down, test this neckline, or if it becomes an impulse, like stretches a bit, test the Fibonacci retracement level, retrace a bit, then push down if there's a structure. If there's no structure, it will come back down, test, and then it will break above. Now, the moment it breaks above, we are saying that we have this level here that was failing to be broken last time here. Now, the moment we break above this area here, we shall just expect a retracement. It will mean that we have broken out actually both in the on the consolidation or the range in weekly and monthly. Weekly, remember we said we're in a range. Monthly also we said we're in a range. So meaning that we shall have broken upwards into this. Now, if also we break downwards, meaning we shall have broken downwards into this. I hope now you can connect all the 3 time frames. Now, remember, this is just analysis time frame, and we do not take trades from them. All these things can be observed into smaller time frames in case it reaches your areas of interest. The most important thing is to just mark your areas of interest. For example, here, when the market went up here, so when the market came down here, we spoke about it in H4 in the previous video. I told you guys that the market is going to most likely break this point here, retest it, which it didn't, it will drop down into this area here, which the market exactly did, and it ranged a bit. Now we have broken upwards. So we're coming to test untested levels here. The market, I'm expecting it to give us a retracement before coming either up here, or if there's a structure when it is giving us a retracement, it will test here and then it comes back down. Depending, please listen to this, depending on whatever structure is being created here. If there is no structure, we shall have a pullback down, then we can continue upwards. If there's a structure, most chances are we're going to retest, then we can break downwards. By structure, what do I mean? Structure, I mean either a shape like a WM, or I mean a pattern. Those who trade patterns like wedges, rising wedge, falling wedge, blah, blah, all those ones. So it's clearly, and we take entries in our entry time frame, which is H1 and H4. Hope you guys recall that we have been speaking about all these things that I've mentioned here in the previous topics and the previous videos. I really hope you're seeing how we implement the same things that we're teaching you. We're not trading using something different. We're trading exactly what we're sharing with you guys. So I hope you guys can utilize this. Have a great week ahead.